Hey traders, this is Blake Morrow, and if my big fat head doesn't scare you, it probably should. Well, the reason why you see me at this moment is because I want to remind you, this is the last week you can actually register for the Traders Summit event, April 8th through 10th. So it's next weekend. Actually, it's next Friday. It's a free event, so register. What are you waiting for? The seating is limited, especially for the live. If you're going to listen live, you need to be registering today. Because when you go to log on, if you can't get a seat, I don't want to have to come back and say, I told you so. This is going to be one of the biggest events of the year. There are so many great speakers. So I'm going to go ahead and move myself and share with you. Excuse me for all of that. I'm going to share with you all the speakers that are coming to this event. It's going to be massive. Make sure you guys register. And even if you can't attend live, so you can get the recordings afterwards. Because if you're registered, you'll get the recording. If you're not registered, you won't get the recording. So why not register? It's free. So make sure you do so. It is next week. It's going to be epic. There's something for everyone here. So I hope you all take a moment right now and get registered. Just type in your name and your email and click register. There we go. Right there. Register now. Do it. All right. Now, also I have to mention, if you guys haven't tried out Forex Analytics, do so. If you haven't checked out the trader funding program, you want to kind of figure out how to get Forex Analytics for free for a little bit, where you want to trade our money and not yours. You think you're a good trader? Check out the trader funding program. Just go to forexanalytics.com with an X, analytics with an X, and check it all out. Make sure you try out Forex Analytics, even if you don't go through the trader funding program. All right, and you get all these great little tools and all these great little features in our app. It's very user friendly, and you get all this great analysis and all this live feeds and chat rooms. God, try it out. Try it out. Okay, all right, let's get into the markets. I want to actually talk let's actually take a moment, and I'm going to take a breath and realize we are going into a new quarter, new month. We got past the jobs report, and you know what? The market's actually not too far away from where it was last weekend when we spoke. The equity markets have rallied. We've seen a rally back in equities, but the currency market's still kind of sideways here. So we're going to talk about a few of the markets that I think are leading the charge higher or lower. So make sure you stick around so we can go through all the technical analysis and what's happening throughout next week, which, I love it when we're past non-farm payroll, things kind of settle down a little bit and we can kind of let the dust settle and see what's moving the markets. And right now, I want you to pay attention to crude oil. Crude oil is one of those markets that we are approaching really critical support. I think that critical support comes in right through here around the $95, $97 range. And you can see this previous trend line that we broke through. It was a channel, right? And we broke through the upper end of it, and now we're kind of consolidating above it. The problem is if it starts breaking back below 95, then technically you got a false breakout. You got a lot of people would call it a throw over. If you get a throw over, a false breakout above these highs right here, then a lot of times what that does is that leads to a breakdown. Let me get an arrow here. There we go. That leads to a breakdown, and then it will eventually fall through the support. Now, a lot has to happen, and there's a lot of analysts that look at crude oil and say that's just not happening. But that doesn't mean that we can't get some volatility, and that's what us as traders we look for, right? A break into the mid 90s probably is going to bring in a lot of volatility for the markets. I actually want to talk a little bit about equities too, because we were talking about the S&P and how we had this overshoot of the this resistance here. So because of that, it created a higher high. Right. And I think this move above these highs right at this level, around the 4,600 level, really stopped out a lot of shorts, because I personally thought we were going to stop somewhere closer to the 200-day moving average or the 618 retracement. And because we broke above that, I think I wasn't the only one. A lot of traders got stopped out. And then now if you look for a move back below the 200-day moving average, or maybe this 4450 level, that might usher in some selling pressure. Now, it's not just the S&P that's stalling, though. You take a look at the NASDAQ, and let me let me delete all that really quick. Take a look at the NASDAQ. The NASDAQ's actually stalled at the 618 retracement, also right across resistance. You look at the Dow's also stalled around the 618 and also the 200-day moving average. So it's not just the S&P that's stalling. You're seeing other indices also finding some resistance. Now, if you look at currencies, the currency market is pretty, we've been consolidating. The dollar index has been really on the forefront of what I'm looking at because the dollar index has really established very critical support around the 97.60 level. This area of support is so critical for bulls. Now, if we break below this, and you guys have probably read this on the, I'm sorry, let me think about that really quick. The blog, I think I put it on a blog this week. Let's go back over. This is free, by the way, if you guys don't know where the blog's at. Yeah, the dollar index on March 29th. I really signaled the importance of this this key 38% retracement. The fact of the matter is, as long as we're holding above this 97.60, 97.70 level, dollar bulls are fine. We break below that, and I think the risk is that we not only break the channel support, which comes in around the 618 retracement at this 96.50 level, but it also could possibly usher in some further selling down towards 94.50. Now, if you think about that in euro terms, what that would mean in euro terms is we would actually break above, this 111, 111.50, 112 area, and we'd start making our way back over towards the 200-day moving average, which is near like the 114.50. A lot has to happen in order for that to happen. And I think a lot has to happen on the Russia-Ukraine front. We have to see a de-escalation. We have to see some peace talks. Maybe a ceasefire. Doesn't mean that the conflict will be over and Russia's going to just, pack their stuff and leave. No, but I think if we see a de-escalation of the situation, you would see the euro actually rally, because that would make analysts believe that the ECB may have to fight inflation, and they have the ability to do so by raising rates eventually, and that obviously would allow the euro to rally. The one thing I have to talk about regarding the dollar, and I think those of you that follow my analysis on a daily basis already know this, but if you don't, just so you know, we do a F.A.C.E daily webinar. It is free for anybody to attend. If you guys don't know how to get to that, let me just take you over there really quick. I just want to make sure everybody knows how to get there. Just click on our website where it says webinars. See where it says free, register now to attend for free. Just click that. It takes you to our Zoom sign up page. Then you'll get an email reminder every single day when we do the F.A.C.E webinar. So make sure you attend, because for those people that are listening to my daily analysis, not with just me, but the rest of the team, know that I worry about the dollar and about being bullish the dollar, because expectations are so high at this point in time for the Fed to raise rates aggressively into 2022. So one of two things are going to happen. Expectations are already there, and so the market's already priced it in. So what happens if the market starts having to price in an aggressive rate hike cycle from the ECB or any other central bank? That could really weigh on the dollar index. The second risk to the dollar would be that growth really starts to slow, inflation starts to taper off a little bit, which I don't believe is going to happen, but let's just say that is a risk. And our economy starts to slow, and then economists and analysts stop believing that the Fed's going to raise rates as aggressively as they are, and then expectations start to come down. Then the dollar's really going to come under pressure, especially if you start to see central bank divergences where the ECB has to raise rates and the Fed may not, or less aggressively, more aggressively in either situation. That could really weigh on the dollar index, and that's my bigger fear with the dollar moving forward, just so everybody knows. And it's not just the dollar, it's also other central banks too. Let's take a real quick look at the sterling. Sterling continues to hold below what I consider is pretty key, right at the 132 level. And the 132 level, the reason why I think it's critical, let's delete this fib here, and let me go ahead and redraw. The 132 level represents the 38% retracement. I'm sorry, it's 133. I said a typo. Get it? All right, forget it. Bad joke. All right, so that 38% retracement is, whoops, I didn't mean to do that. The 38% retracement is going to be critical. It's also, you can see how it's previous support, also current resistance, 38% retracement, comes in around the 133 level. So roughly 133, that's going to be pretty key resistance for the sterling. As long as we're below that, I think, being bullish is going to be kind of difficult. But we get above 133, that's going to open up the door for maybe a move back to the 200-day moving average and channel resistance. There's a lot of room. That's a lot of room. 132 to 135. I mean, 200 pips. 200 pips is 200 pips, any which way you slice it. Another trade we need, or another pair we need to be looking at, is the dollar yen. Now, this is the one currency that actually, the dollar versus the yen, that makes up what, 17% of the dollar index, somewhere roughly around that. See, I don't see the dollar yen really backing away. I know a lot of people are thinking, oh, the dollar yen, it was fiscal year end, we rallied, sharply. Oh, look, I can't really argue any good reason to buy yen, to be honest. I mean, I just think about it why do I actually want to own yen at this point? If you guys have good reasons, please jump down in the comment section and let us all know, because I'd like to know, and I'm sure other people that are viewing this this week ahead video would like to hear what you have to say. So jump in the comments below. Love to hear it. Anyway, again, I can't think of any real good reason that I want to own yen moving forward. So for me, I'm actually looking at this dollar yen, and I just want to be a buyer on dips. So if we can get a dip back down towards 120, something like that, that'd be great. But that is going to support the dollar index to a certain extent. God, that's a really, really poor drawing on my part. Let me try that again. If we see a move like that, then, I'm looking for maybe a dip towards 119, 120, something like that, to offer some better buying opportunities to be short yen, long dollar yen. And it's not just the dollar yen, it's other yen pairs that I'd actually probably go to choose, which would be like the Aussie yen or the Kiwi yen. And by the way, if you want analysis on all those other yen pairs, please jump in the daily F.A.C.E webinars, so you not only get my opinions, but you also get the rest of our team. All right, so anyway, there is a lot really to unpack going into this next week. There's a lot of markets that are really giving us reasons to pause here. And then I think it's going to create a lot of volatility as we go into the months heading into summer. Summer is when we tend to get a lull in the market. You start getting into the end of June, July, August. A lot of traders start to take that time away to take vacations with their family, or just take some time away from the markets. But there's still a few months, next couple of months, that we can see some increased volatility in the markets. Also have to mention that next week we do have the RBA. They are meeting. And with the RBA, let's take a look at the Aussie really quick. And this is really critical. The Aussie has stalled. If you notice here, the Aussie has stalled at the 618 or 161% extension of this last move. You can see this high to this low, we have now stalled. We also are making, as of right now, lower highs. Do you notice how it's a lower high? Here's the risk. If you're bearish, the Aussie, and let me just go ahead and delete this really quick. Do you see what the Aussie's doing price action wise? It's consolidating recent gains. That's a bull flag pattern, guys and gals. So the risk is, if the RBA comes out more hawkish next week, we can see the Aussie plow through that resistance and plow through those highs. And that comes in Tuesday morning. Monday night, if you are in Australia or in Asia, it'll be Tuesday morning. But if you're in North America or in Europe, it's going to be a late night for you guys if you're going to stay up for that, especially if you live in Europe. And if you live in the U.S., look, I'll be watching. I'm going to be watching the RBA Monday night for sure. We also have the FOMC meeting minutes, and then we have Canadian jobs report at the end of the week. So make sure you stay tuned to the F.A.C.E webinars. Again, last call for alcohol. No, just kidding. Last call to make sure you guys register. This is a massive event. There are so many great speakers coming up this next week. So make sure that you guys register. Look at the list of speakers that we have here. It's amazing. It is absolutely amazing. All right, guys and gals, my name is Blake Morrow. I hope you guys all have a wonderful remainder of your weekend. I will see you on the F.A.C.E webinar Monday morning. And if you like this video, make sure you give us a thumbs up, subscribe to the channel so you don't miss any of our content that we put out here each and every day. All right, thanks again, and thanks for spending your time with me. I'll see you on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.